Hi everyone, Randy Martin here. It is February 17th and we just came off a week where they announced less than pleasant information about the inflation rates, and I just wanted to share my 2 cents on that and maybe explain that it's not as bad as maybe it seems, or definitely not as bad as some of the media will make it seem. So first, inflation is probably going to stay roughly where it is for the next couple of years. They're probably going to struggle to get it back under 3 meaningfully, and to keep it there meaningfully, probably until late 2025. I would not be surprised about that. So keep that in mind in your investment strategy. Not that it makes that big of a difference. Just pick assets that have a tendency to do well against cash. And remember, inflation isn't really the price of everything, commodities and all other things going up. It's the devaluation of the currency. So just pick things that hold their value well, and inflation will actually work in your favor in this case. Second, everybody's kind of freaking out about what this means for interest rates, and I wouldn't know that it's going to impact it or not. In fact, if anybody can predict interest rates a couple times in a row, they're going to be billionaires. So it doesn't really happen. However, if I were to forecast, I would say that interest rates are probably not going to go down until the second half, probably late third quarter of 2024. For the US anyway. Canada might mirror early on, but they might be a little bit slower. I would expect a slightly slower cadence for Canadian rate drops versus the United States. And that means that Canada will probably be well into 2025, probably late into it, by the time interest rates come to something that resembles what we're used to, or what we were used to before the hikes started to happen. Which again, it's okay. Interest rates being high puts a lot of people that are indebted under strain. It puts new homeowners or new mortgage buyers slightly under stress. Definitely if you had variable rate on some of your loans, it's going to impact you. All of these things in my system of belief, I guess, when it comes to finances and investing, are things that you should not be doing. So anyway, if you are in that situation, focus on your debt repayment, get rid of it. Debt is servitude, so get rid of that as much as you can. But since there's a downside or a crisis on one side, it means there's opportunity on another. So don't forget that interest rates being high means it's a good time to get into the money lending business. It's not a good time to be in the borrowing business, but it's a good time to get in the money lending business. And I would say that over the next 3 years or so, companies, whether credit cards, banks, subprime lenders, non-prime lenders, are all going to make record profits. Their stocks are all going to boom. Their dividends are going to be growing. So if you're in the market, why not take advantage of that? So that's basically my 2 cents on inflation and interest rates. Plan that they won't go down in the first half of 2024 at all for Canada and the US. I would plan maybe 25 to 50 basis points in the US in the third and fourth quarter. Probably half as much on the Canadian side. So if you get a 100 basis point drop in the US in the second half, you'll get probably 50 point drop in Canada. Anyway, thanks for watching, and subscribe if you like this channel. Thanks.